The stock market is a place where you and I can go and invest our money based on what we think is going to happen in the economy in the future. And the stock market has been rallying since mid-2020, even when we were in the midst of this pandemic. The reason why is because people believed that our economy would recover quickly and come out of this pandemic and be like normal. The issue that could happen now is we're coming out of this pandemic and our economy is starting to recover and the stock market has already priced in a full recovery. But what happens if our economy doesn't recover as fast as we would like? What happens if our economy continues to struggle for a while? Or what happens if these vaccines don't work as good as people hope they would? We're already extending eviction moratoriums, which means landlords cannot kick out tenants that are not paying rent. We're already extending moratoriums against foreclosures, which means banks cannot foreclose on homeowners that are not paying their mortgages. We've seen an absolute insane amount of money printing happen over the last year. And unfortunately, we've seen the stock market almost turn into a casino. You know, I've been covering the GameStop and the Reddit and the Wall Street Bet story on our YouTube channel, so you might have already seen me talk about it, but there's more to the story than just people making investing decisions. It's people trying to stick it to the man on Wall Street, saying if Wall Street can do certain things, how come us retail traders can't do the same thing? The issue that I'm worried this could create is people going into investing into the stock market hoping now for unreasonable returns, hoping for 1,000% returns in a year or 100% returns in a day, because you have all these new traders entering the market and that's all they've seen. Now, before we go any further, let me just kind of clarify this for a second, because what we've seen happen over the last month or so is really not normal. It is not normal to see 1,000% price growth in stocks. It is not normal to see people rallying together and create this short squeeze. It is not normal to see that happen. Everything that I talk about on this channel is all about making sound financial investments. That way you can sustainably grow your money and build wealth over time. Now, there are people that can make money trading. There are ways you can make money doing risky investments. That's not what I talk about. But the reason these things have been so popular and the reason I've been talking about them, it's not because they're sound financial investments, it's understanding what's fair and what's right. You, as a trader, as an investor in a free market, should have the rights to trade freely. For your wallet's sake, I'm not advocating for you to be a speculative trader. I'm not advocating for you to make risky investing decisions. I'm not advocating you to go into debt up to your eyeballs to buy a random stock or a random cryptocurrency hoping that you can get rich overnight. I want you to understand how to build wealth sustainably. That way you can build wealth for the long term. Investing in the stock market has transformed over the last century. A century ago, if you wanted to invest in the stock market, it was almost exclusively reserved for wealthy people and rich people because it wasn't easy to invest in stocks. You couldn't just go onto a phone and invest in stocks whenever you wanted because there was no cell phones around then. If you wanted to invest in stocks 100 years ago, you would have to work with a broker and talk to them about which company you want to invest in. They would have to fill up a form and then they would have to go through a whole bunch of different steps and then they would let you buy shares of a certain company. Then in the 1980s came this whole idea of a personal computer, and companies like E-Trade came out and they let people buy stocks on a computer for the first time in history. Then in the 2010s, with the growth of technology and the internet and our cell phones, came commission-free brokerages like Robinhood and Webull, which let you buy and sell stocks without paying a penny in commissions. This new commission-free trading by Robinhood and Webull eventually pushed your traditional brokerages like Charles Schwab and TD Ameritrade and E-Trade to remove their commissions for trading stocks. And so now you had all these brokerages which allowed you to buy and sell stocks at the convenience of your phone or your computer without paying a penny in commissions. And then in 2020 came this pandemic and the entire country shut down. So nobody had a job, nobody had work to go to because the entire country was shut down and the stock market was in free fall. This is when you had millions of people sitting at home with nothing to do who decided, this would be a good time for me to open a stock brokerage account. And you saw the largest influx ever, the fastest influx of retail traders entering the market. And so you saw millions and millions of people go out and they would open up a Robinhood account or a Webull account or a Charles Schwab account or an E-Trade account. And now you had regular people learning about stock market investing and throwing money into the stock market. Now, I'm a financial nerd. I don't know many people that would be as happy as I was when I saw millions of people open up their first stock brokerage account, but that was great. You had so many more people interested in becoming financially educated, and he had millions of people now, retail traders, regular people that were buying stocks when they were dirt cheap when the 2020 stock market crash happened, and Wall Street wasn't very happy when that happened. You had big hedge fund managers coming out saying that these mom and pop traders that are buying stocks have no idea what they're doing and they're gonna lose everything. But what we saw happen towards the end of 2020 was the economy started to recover, and with that the stock market recovered, and the people that won were the mom and pop traders, the retail investors, because they were the first movers. They were the ones that were buying stocks when it was dirt cheap, and Wall Street was late to the game, and Wall Street was mad that they missed the rally. Then come 2021 and the retail traders are feeling confident about trading in stocks because they had a great year in 2020, and then they discovered this thing called the short squeeze, where they found heavily shorted companies like GameStop, AMC, BlackBerry, and they started talking about why they were buying these stocks to hopefully trigger a short squeeze, which would cause the price of these stocks to rally, because now all the companies and the people that were shorting these stocks would be forced to cover their positions, and they would be forced to buy the stock, and that would force the stock price to go up even more. And the retail traders were right. Again, they beat Wall Street at their own game, and the retail traders walked away making a lot of money because these stocks soared and they triggered the short squeeze, which is exactly what they wanted. Again, if you're subscribed to our YouTube channel, you follow our Instagram page, or you read our daily financial newsletter, you know that, again, I'm a kind of a financial nerd, and there's not many people that get excited about this and as riled up about this as me, because I love the idea of retail traders, regular people getting financially educated, learning about investing and making money in the market, especially when you're beating Wall Street at their own game. Here's where I'm worried. There's a lot of speculation, there's a lot of greed, and there's a lot of people thinking that they cannot lose in this market, and it's also fueled with a lot of debt. We have the highest margin in the history of time right now, which means we have the highest number of people trading on debt in their brokerage accounts, with all this debt going into the market. And when you have this FOMO or greed that's fueled with debt, that can cause a lot of financial pain when you don't know what you're doing and when you let things get out of hand. If you made a ton of money in 2020 and 2021, I am happy for you. What I want you to do now is understand how to protect your money, because nothing can go straight up forever. I love the idea of young people getting money, and I love the idea of regular people beating Wall Street in their own game, but now you gotta be smart with what you're doing. The stock market is not supposed to be a casino, and it's very easy to get into this mindset of believing that when you're winning that you can't ever lose. It's called the hot hand fallacy, because every time you roll the dice you win, and when you win, what do? You bet bigger, and you win more, and now you bet even bigger, so you win more, and eventually this roll is not going to work the way you planned. And so you need a plan for that. This is where having a smart strategy comes into play, because you cannot believe that every move that you're going to make is going to win. There's a big difference between trading and investing. Trading is when you buy an investment with the goal of selling it within less than a year. Investing is when you buy something because you believe in its value, you believe in its fundamentals, and you believe in the long-term potential of this investment, and so you plan on buying this investment for at least a year. Long-term sustainable wealth is built through investing. It's not built through trading. Now, trading can make you a lot of money very quickly. We saw it happen in early 2021. We saw it happen in 2020. But what I need you to understand now is, as you're making this money, be smart with it. What can you do with this money? That way you can protect it, and that way you can keep it, because no market can go up forever. Things change. You want to make sure you're set up and in a position to protect yourself and protect your money and protect your newfound wealth when the market changes, because that's what happens. The market changes. I don't know when it'll be. It can happen in a week, a month, a year, a few years from now, but this is something you got to keep in the back of your mind. The people that lose everything when a market change happens are not the people that are investing their money based on sound fundamentals for long-term wealth. It's the people that are investing their money based on greed and speculation, and all of this is fueled by debt. When people start to buy up an asset and you see this asset price rise, it doesn't matter which asset we're talking about, whether it's stocks or real estate or tulips, when this asset price starts to soar and people start buying this asset, not because they believe in the underlying value of this asset, or not because they have a strategy, or not because they believe in the fundamentals of this asset, but just because they hope to get rich quick because they see everybody else getting rich doing it. And so what they do is now they start going into debt. They refinance their homes to throw all this money into this asset without knowing what this asset really is, just to get rich quick. That's how you see bubbles form, that's what causes euphoria, and that's what causes crashes. Thank you for watching. If you enjoyed the shorter clip from my longer videos, here's another clip that I think you'll love. And if you're interested in learning more about how to invest your money in the stock market, our team put together an amazing guide that will walk you through how to invest your money in the stock market. This guide is completely free when you sign up for our daily newsletter. So if you want to read this guide, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.